All right, today we are going to tackle a question that, let's be honest, probably keeps a lot of people up at night. How do you make absolutely sure your retirement savings don't run out? It's a huge deal, but the good news is there are tools designed specifically for this. We're about to break down two of the most powerful options out there.
For decades, the path to retirement seems pretty clear, right? You work hard, you save consistently. But the moment you stop working, that clear path kind of vanishes. And all of a sudden, you're faced with a new and, frankly, a much harder question.
Exactly. Now what? You've spent a lifetime building this nest egg. The challenge now is to turn that lump sum of money into a reliable paycheck, one that's going to last for the rest of your life. So how do you even do that?
Well, this brings us to a financial tool that's really powerful, super common, and yet often pretty misunderstood, and that's the annuity. At its very core, an annuity is like an engine designed to do one single thing: turn your savings into a predictable stream of income. So what even is an annuity? Well, to put it simply, it's a contract. It's a deal you make with an insurance company. You give them the money, and in return, they give you a guaranteed stream of payments back. It's a tool built for certainty. But here's the thing, not all annuities are created equal. So let's explore two very different ways to create that income. First up, we've got the most straightforward option, the fixed annuity. You can think of this as the bedrock choice. It's really built for people who put safety and simplicity above everything else. With a fixed annuity, the one word you have to remember is predictability. In a world filled with volatile markets, this tool acts as a steady, unshakable foundation for your savings because you know exactly what your returns will be. They're guaranteed. Now, this guarantee really rests on three key pillars. First, there's principal protection, and it's exactly what it sounds like. Your initial investment can't lose value, period. Second, you get guaranteed growth. That means you get a fixed interest rate with no surprises. And third, your money grows tax-deferred. This is a big one. It means you don't pay taxes on the interest every year, which allows your money to compound way more efficiently until you actually start taking it out. So you can kind of think of a fixed annuity as the defensive line of your retirement portfolio, right? It's the part of your plan you use to shield a portion of your savings from all that market craziness, creating a real foundation of peace of mind. But what if you want that safety net, but you're also willing to trade just a little bit of that certainty for more growth potential? Well, that brings us to our second option, which really tries to offer the best of both worlds, the fixed indexed annuity, or FIA for short. The entire concept here is growth with a safety net. An FIA is designed to let you participate in the stock market's potential gains, but, and this is key, without risking your principal when the market goes down. It's a hybrid approach. Okay, let's break down how this actually works. You still get that full principal protection, so you can't lose your money in a market crash. The difference is how it grows. Your earnings are linked to a market index, like the S&P 500. So if the index goes up, you earn interest. But, and this is the critical part, there are limitations. For example, there might be a cap that limits your gain to, say, 7%. So if the market shoots up 15%, you get 7%. But if the market goes down, you get 0. You never lose. And that right there, that is the fundamental bargain of an FIA. You're trading away the chance for those huge double-digit market gains in exchange for the absolute guarantee that you will never, ever lose your principal. That trade-off, that's the entire point. This really makes the FIA a compelling middle ground solution. It gives your money more power to fight inflation than a standard fixed annuity would, but without exposing your hard-earned principal to all that market risk. Okay, so we've looked at two very different tools for creating security. So how do you decide which one, if either, is the right fit for your retirement plan? Let's just boil it all down. The fixed annuity gives you predictability and simplicity, but probably with lower returns. The fixed indexed annuity, on the other hand, opens the door to higher market-linked returns, but it's more complex, and it comes with those caps on your gains. So look, there's no single best option here. There's only the one that truly aligns with your specific goals. At the end of the day, the right choice starts with some honest self-reflection. What are your real financial goals? What's your true comfort level with risk? And remember, these aren't just standalone products. They're pieces of a much bigger financial puzzle. And because that puzzle can get pretty complex, working with a professional can be the best way to make sure all those pieces fit together perfectly for you. And all of this brings us right back to the most important question of all. Forget the product names for a second. Forget all the jargon. When you close your eyes and you picture your retirement,
What does financial security truly look like for you? Because answering that question, that's the first and most important step toward actually building it.